David, thank you very much. And ladies and gentlemen, thank you so much for having me here in Seoul. It's fantastic to be here. My name is Simon Taylor. I'm from a small company called 11FS, and I've spent the last 5 years of my professional life looking at the subject of blockchain, also known in some quarters as distributed ledger technology, and trying to understand what's real, what's going to happen, when is it going to happen, and what does it actually mean for you and me? So that's what I'm going to talk about a little bit today. So I think the first thing we need to understand is the reason this subject can be so confusing is because it's actually 3 subjects. And it may be many, many more. You can divide it a whole bunch of ways. But I actually think that there's a subject that a lot of people call distributed ledger technology. This is also known as blockchain without the cryptocurrency. And typically, the people who are using this are big companies. Big companies find things, and big countries and central banks find things like a cryptocurrency very inconvenient. They think it's inefficient, but they can see some benefits in being able to have a computer that can sync up all of their computers. Think about the problem that big companies have. Every big company has their own infrastructure, and they understand their own infrastructure. But another big company has its own infrastructure. And the problem is getting these 2 companies' infrastructures to agree with each other, certainly in services like banking or insurance or many industries, global trade, for instance, is very, very hard, very, very manual, and very slow, often paper-based. So having a technology that syncs all of those computers together for the old world of technology companies, for the old countries, or even for people who are building companies in the last 10 years, is very compelling. So I think in the next year or 2, we will start to see these projects emerge. Many of you will have seen that the Hong Kong Monetary Authority and the Monetary Authority of Singapore announced that with global trade, they're working with a company called R3 and another company called TradeIX to digitize all of their trade documentation. So if you think about global trade, distributed ledger technology is maturing into usefulness. That is subject number 1. Subject number 2 is this subject we've started calling blockchain. Now, for the Englishman in me finds that very confusing way of saying things. I prefer the term a blockchain or the blockchain. You need the word before it, because the idea that we call it blockchain kind of takes it away from the fact that there can be many of these. And that's confusing, because when we say the internet, we think of it as one thing. But here's a crazy idea. There is no such thing as the internet. The internet is a network of networks that connect together. Similarly, the subject of a blockchain, it's very helpful to think about this as many, many subjects. And people tend to know this as being Bitcoin or Ripple or Ethereum. These are the things we know. But actually, I prefer a term that's starting to gain popularity in some technology sectors called Web 3.0. So Web 1.0 was email and websites and basic communication. Web 2.0 was buying things online, the internet of commerce. It was social. It was pictures. It was all these things. What will Web 3.0 be? So I'm going to talk about that a little bit today. And this is where I get excited. What happens when cryptocurrencies, crypto assets, start to come into the old world of financial services or government or energy or any other sector? What happens when distributed ledger tech starts to become compatible with this crazy new world of Web 3.0? So this is what I think is going to get exciting. First, let's talk about corporations and DLT. Let's just give some examples of where this is being used. I mentioned supply chain. Think about the problem in supply chain when everything you touch, everything you can see in this room, everything that we have on every chair, every table, everything has come to you from a supply chain. Whether it was somebody chopping down the tree, whether it was somebody shaping the wood, whether it was somebody sending that wood from one country to another country, whether it was somebody then painting it, and where did the paint come from, everything is in a supply chain. Every country is in a supply chain, every jurisdiction, every company, every person. See, the problem with this is it becomes remarkably inefficient. If you've ever had to deal with a supply chain, there is a lot of paper, manual processes. When the goods are loaded onto a lorry, or when the goods are loaded onto a ship, or when the goods are loaded onto an aeroplane, somebody signs a piece of paper. And this piece of paper is what we call a bill of lading. This piece of paper is roughly 2,000 years old in heritage. We haven't really changed how we do global trade in nearly 2,000 years. Why is that? Because this piece of paper is a list of signatures where people have said the goods have gone from here to here to here to here. Now imagine if we had a technology that could sync up all of those computers. Well, this has existed for many years. We call it a database. See, the problem is, with a database, somebody has to be the administrator. Somebody has to be the owner. Somebody has to be in control. Now, which country is in control of global trade? Which country sets the rules and the laws? I think different countries might have disagreements. So therefore, you can't have one central place in which you can have world trade. If you can't have one central place, then you can't use traditional technologies like databases. You have to use something new like distributed ledger technology. The Internet of Things and energy markets, I think, will be another area. I can't go into these all because I can see my time is running out. I think media is going to be really interesting. And I also think payments and financial transactions will be involved. And you see a lot of banks looking at how can they move money around the world. MasterCard got a patent looking at how do they help people move money around the world faster and more efficient. And I think this is the message, is faster and more efficient. So we need to understand that I think in the UK and I think in the US, we have a saying, it's a 3-horse race, with the amount of horses being how many likely winners there are. These are the 3. If you are a big company looking to work, of course there is now a 4th, Exoneum, I can't forget this, but the major platforms are Enterprise Ethereum Alliance, Corda from R3, and the Hyperledger Foundation. These major platforms are the leaders today. But 10 years ago, the leaders in social are not the leaders that we have today. So this space is still early. But when I say it's maturing into usefulness through 2018, I do think that there are a lot of people starting to take it very, very seriously in government. And so this is why I think that's the case. David asked the question, what happens with central banks when they look at this technology? Well, quite happily, a lot of central banks, like the People's Bank of China and like the Bank of Japan, have been very, very vocal on the subject. The Bank of Japan has actually announced its initiative for digital currency transfers between peer-to-peer people. So it would be a mobile app that you and I have in our pockets, and we could send each other money, but instead of it being money that sits on a bank account, it would be money that's held by the central bank, but it's also sort of sitting here in your wallet. It's digital cash. And because it's sitting on your device, it feels a lot more like cash. See, here's the magic thing. When I send you an email, what's actually happened is I have an email and you have a copy of the email. I can now edit my email and you won't see any of the changes I make. You can edit your email and I won't see any changes. But if I was to walk down the stage and give you that, you now have this and I no longer do. We call that physical uniqueness. The thing that digital currencies have, especially when they're backed up by a blockchain, is digital uniqueness. And this is something that's really, really compelling. The Bank of England has put out a number of studies along those lines, and of course, even the European Central Bank has now started to investigate the area. What's interesting, though, is that some of these have been quite dismissive of cryptocurrencies, but very, very positive about the idea of central bank-issued digital currencies. So where does that lead us? Well, if we have central bank issued digital currencies, we can potentially move money between any actor in the economy much faster and more cheaply than we do today than by relying on the banks. And if we have distributed ledger technology, we potentially have a more efficient global economy because we're not living in data silos, we're able to reconcile all of those transactions. And what do I mean by reconcile? We can synchronize all of those transactions without them getting lost in data silos as they happen today. So that's why people find blockchain without the currency or distributed ledger technology compelling. And it's quite a nice story, but it's not the fun one. Let's dive into this subject a little bit more. This is the one that starts in 2008 with a white paper from the so-called Satoshi Nakamoto, the apparent inventor of Bitcoin, the peer-to-peer digital currency, or peer-to-peer cash system, as it was originally announced in the white paper. We cannot ignore the price of this thing. It has been going absolutely parabolic recently. Now, depending on who you speak to, and often depending on their age, you will find that a lot of people view this like the railway bubble, like the tulip bubble, the Dutch tulip bubble in the 1600s, where the price of the tulip flower shot up in price and then almost as quickly disappeared. This looks almost like a textbook bubble. Except it seems to not be crashing just yet and seems to be gaining price. There's been a sideways movement since it's reached its top. It seems to be still going. And the really interesting thing about the price isn't that this is an investment. I'm not interested in what you think of it as an investment. I'm almost not interested in if it crashes. That doesn't matter to me. What matters to me is there was a really good article I saw this morning that said the amount of senior executives, so CEOs and CFOs, at their corporate earnings calls talking about blockchain has almost tracked the price of Bitcoin perfectly. The correlation between corporations talking about blockchain and the price of Bitcoin is almost one-to-one. This is interesting. So if DLT gives us more efficient economies, why does it take the price of Bitcoin rising for us to pay attention? Interesting question to think about. Bitcoin may not be the answer to everybody's problems, but it's certainly got everybody's attention. So let's introduce a new term. I actually prefer the term crypto assets. So we've heard the term cryptocurrency. Cryptocurrency is confusing because we think about the cash that sits in our pockets as currency. These things are a little bit different. So I'm using the term asset, and an asset can describe oil, it can describe gold, it can describe a government treasury, it can describe a house. An asset is much broader. And because it's much broader, it allows me to put it in some context. So for context, the global art market last year did around $56 billion in sales, in US dollars. That's not insignificant, especially when you consider that the global wealth industry and asset managers and pension funds are now looking at the art industry as being an area in which their customers can see growth, because the traditional markets just aren't growing like they used to, especially in developed nations and especially in Western regions. Crypto assets dwarf this already. The crypto asset markets are running around $200 billion US dollars in market cap. That is extremely significant. And just to give you a flavor of how significant, the US airline industry has a market cap of around $220 billion US dollars. This is a big industry. And yet, the way that regulators, the way that governments, and the way that industry talks about this topic just has not caught up. This is real. Real people's money is in here, and it is growing. Now, could it be a bubble? Could it lose 10x its value in the next 12 months? Yes, it could. But even if that disappeared by 10x, it's still nearly half the size of the global art market. So it doesn't matter if it's a bubble. Railway didn't go away because of the railway bubble. it actually went on to become extremely successful and transform much of the world. And it was probably the steam engine that was the real piece here. And so people look at Bitcoin and they say, that's the interesting thing. And I say, no, I think crypto assets are much more interesting. Then there's this subject we call ICOs. When we look at the future of money and we look at the future of funding, one of the really frustrating things about the past couple of decades, I think, for entrepreneurs is there's been one way to really get funding, and that is through venture capital. And for many people, venture capital is broken because it relies on the skill of a very small number of individuals to spot an investment. The other problem with venture capital is by the time a company goes public, it does its initial public offering, most of the value increase has already happened. So you and me, we don't get any value, but the venture capital firm does really, really well. So somebody came up with this idea of an initial coin offering, or selling tokens, making up their own tokens to represent value, or sometimes shares, sometimes it's a ticket, for selling their product to raise money for their new idea. Now, there are two ways of looking at this. You can see it as I'm selling shares in my new company, and when that company does well, you will get a share of the revenue according to how it's done. Or I'm selling you a ticket, and this ticket is to a music concert, but the music concert, I don't have the stage yet, I haven't hired the artists, none of that exists, but if you give me the money, I will give you the ticket at 10% of the future price of that. So I now have this ticket that's going to be worth $10, and I got it for $1, and I'll be able to spend it to get access to this market. That's the idea of an ICO. So in 2017, the first half, the global funding for all of FinTech was around $6.5 billion US. Just to give you a feel, ICOs did nearly half of that in the same time frame. This is why there have been a lot of people rushing at this subject, because there have been some tremendous things like Filecoin that raised nearly $250 million that I think will go down in history as being one of the great ICOs. And then there have been some things that look very, very much like scams, which is why regulators have had to already move in, and pretty much anybody can walk into a room and say, hey, I'm offering an ICO, and have investors try and throw money at them lately. It is absolutely in fever pitch, and we do need to find the right balance. As I mentioned, the South Korean regulator banned all ICO activity. My own personal view is that an outright ban may be a little too harsh, but there is definitely a need for best practice, code of conduct, and more transparency in the ICO market, because without question, somebody could lose a lot of money if you're not very careful in this market. This market is early. But I look at what I come from, as does Brett, background in FinTech and finance. What happened with crowdfunding, crowd equity, and what happened with peer-to-peer lending in the UK is the first thing that happened was the industry itself set up a voluntary code of conduct. It set best practice and said, we will all adopt this. And the regulator said, that's very helpful. So I'm now looking for this to happen in the ICO space and leading a number of initiatives to try and make that happen. Because I believe if we can clean this up, it can become something that solves a real generational problem. If you are under the age of 30, maybe even under the age of 25, you'll be thinking, what do I invest in the future? How do I grow? What shares do I buy? Should I buy a property? One of the other questions people are asking is, should I be looking at ICOs and cryptocurrencies? I think that's an interesting question, and we need to recognize that the old way of saving for a pension just doesn't cut it anymore, given the demographic changes we're facing in the fourth industrial revolution. So when Jamie Dimon, the CEO of JP Morgan, says it's a bubble, he's right. But when Christine Lagarde, who's the chair of the International Monetary Fund, says it's a revolution, she's right. It is both sublime and ridiculous. It is a bubble. It may crash, but it's a revolution, so don't ignore it. I'm very conscious I'm running low on time, so I'm just going to try and get through the last piece here. This convergence subject, I think, is where things get really, really interesting. What happens when we see more efficient economies through DLT? Well, we've seen the UN and the World Food Programme have started to do this. What happens when we start seeing things with pure blockchain technology? We see things like the project called Grid Plus. If you haven't looked at Grid Plus or Power Ledger or decentralized energy, tremendously interesting, and I think we should see more of that. But Grid Plus and decentralized renewable energy is really, really interesting in a bubble. It gets far more interesting when it starts to touch the real economy. That's what I'm looking for. I think convergence is where we're going towards. So we're talking about blockchain and DLT a lot. In a few years, we're going to be talking about Web 3.0. I think that is the future of the internet and the future of the economy. I think it's a new way of funding infrastructure, and I think it's a genuine revolution. Ladies and gentlemen, thank you.